40-year cup and handle in silver is unlike anything I've ever seen.
Yep.
I mean, look at the cup and handle formation in silver. If you pull up a chart, it's enormous, and it's about 40 years long, which means it's very mature. And for those people who don't know technical analysis, it's one of the most bullish technical indicators of all time. So you see the cup and handle formation in both gold and silver, maybe even stronger in silver. And again, the only reason these countries aren't bitching is because they're the ones buying it. They're the ones knowing they've got the West over a barrel. You do not need to send, cruise missiles into the U.S. to fight the U.S. to beat them. You just need to beat them at their own game in a lawful manner. And that's stand for delivering all the world's commodities. And that's what they're doing. And they're beating us because of our own stupidity, which is suppressing a market that no one ever stood for delivery. They are now. And that's how you win a game that is transitioning from opaque debt promises to commodity-backed ecosystem, which we certainly are, it seems like. So that'll all change when there is a non-delivery event, or there is a cash settlement event, or something that triggers the rest of the world to understand that price discovery on the West is a joke. And you look, for example, look at the difference between COMEX, which is rehypothecated 15, 16, 1700%, meaning 17 people all think they own the same, all have a contract and think they have claim to it. But if one person says, give it to me, and gets it, what happens to the other 16? Well, that's cash settled. But you look at the Shanghai Metals Exchange as an example. In order to trade a bar on the Shanghai Metals Exchange, you have to first buy a bar from one of the 6 or 7 pre-approved refineries, who will give you that bar, and then they laser inscribe a serial number on it that is associated with the contract. And that inspires confidence and credibility. We don't have anything like that on COMEX. It's just completely, totally sold over and over and over and over and over again, because most of the people don't stand for delivery. So we'll cash settle if we're Bank of America or JP Morgan or whatever, and no one will ever know until people say, give it to me. And that's what happened to Bernie Madoff. Same thing. It's a Ponzi scheme until it's a business, until it is discovered as a Ponzi scheme. And, me screaming and others like me screaming about this only does so good, because, maybe the people who are standing for delivery understand it, but if really the people in this country understood it, it represents an opportunity of a generation to buy an asset that is being accumulated at levels people I don't think quite comprehend, because it's being masked by the inability to get real price discovery by this rehypothecation and this naked shorting in London that is for a very long time obliterated price discovery and the real value found inherently in this stuff. It's not lost on India or China or Russia or Saudi Arabia or the other countries who are using it against us, but it really truly is, in my book, in my mind, an opportunity of a generation, one that you will not find very often. Look at the fundamentals: price, demand, supply, lack of supply, errors in reporting of supply, rehypothecation, massive naked shorting, all of this stuff, and accumulation by half the world using that against us. This is a rare opportunity. Either you take it or you think I'm talking my book. That's up to you. But I'll just simply tell you, I've never seen anything like it. I think it's a bet that I would be willing to take if you have a time horizon that's not too long down the road, but markets can stay irrational longer than we can stay solvent. That's true. In the end, mathematics will win this. This is all about math. It's all about logic. It's all about economics. And in the end, that will all prevail. Don't know how it plays out or what triggers it.
Andy Schectman's insights take us on a deep dive into the global financial system, where the price of silver has been systematically suppressed. But why? For one, silver plays a critical role in everything from electronics to solar panels, and yes, even in military applications. Countries like China, Russia, and India are hoarding silver, buying it up at a pace we've never seen before. And this is all happening while the price is being suppressed by major Western banks, making silver one of the most undervalued assets on the planet. One of the most bullish technical indicators in finance is the cup and handle formation, and silver is showing a textbook example of it, a 40-year cup and handle, no less. For those unfamiliar with technical analysis, this is a big deal. It's a sign that silver is ready for a massive breakout. The last time we saw a formation of this size, we were on the cusp of one of the greatest bull markets in history. For 40 years, the silver price has been held back, forming this massive technical pattern. The handle, representing the final phase of consolidation before the breakout, is happening now. Once this pattern fully materializes, we could see silver skyrocket. And when that happens, those holding physical silver will reap the rewards. So if you're wondering whether now is the right time to invest in silver, consider this. This 40-year formation is signaling that silver is ready to explode. It's not a matter of if, but when. Western banks, particularly 8 major banks, are heavily shorting silver in the paper markets, selling it multiple times over without the physical metal to back it up. On the COMEX commodity exchange, these banks have sold silver that doesn't exist, creating an artificial oversupply. Schectman uses an excellent metaphor here. It's like 17 people all claiming to own the same ounce of silver. If even a fraction of them demand delivery, the system collapses. So why aren't these banks panicking? The simple answer is that, until now, most people haven't stood for delivery. But that's changing. More countries, particularly from the BRICS nations, Brazil, Russia, India, China, and South Africa, are starting to demand physical silver instead of paper contracts. This is causing a slow drain on the available physical silver in the market, especially in London, where 8.1% of the entire silver float was delivered off the London Bullion Market Association in just 1 month. Here's the thing. When enough people start standing for delivery, the jig will be up. The market will realize that there isn't enough silver to go around, and the price will spike. The global financial system is transitioning from one based on fiat currencies, debt promises backed by nothing, to one backed by commodities. In the old system, countries could simply print money to finance their deficits with no tangible backing. But in the new system that's emerging, countries that hold real assets like silver and gold will wield the true power. Schectman argues that you don't need missiles or military might to beat the US in this new world order. You just need to beat them at their own game, by standing for delivery on commodities. And that's exactly what countries like China and Russia are doing. They're draining the West's silver reserves while the Western banks continue their reckless shorting practices, oblivious to the fact that they're handing power to the very nations they seek to suppress. Think about it. While Western nations are busy printing money and manipulating markets, China is flying around the world, buying up silver in its unrefined form and refining it themselves. They're taking the metal off the market in a way that's barely noticeable to most people, but it's having a massive impact on global silver supply. The silver and gold markets are on the cusp of a monumental shift. The writing is on the wall. Countries are quietly hoarding silver and gold, while Western banks continue to manipulate prices through paper markets. But this can only go on for so long. When the house of cards collapses, those holding physical silver and gold will be the ones who come out on top. So what's the takeaway? Start accumulating silver and gold now while the prices are still suppressed. Because when the floodgates open and everyone rushes for the exit, you'll be glad you got in early.
When you talk about a price ratio at 85-1 and a mining ratio at 7-1, that in and of itself is bad enough, right? I mean, that in and of itself says, well, something's really wrong, and maybe it doesn't have to get 1-1 with its mining ratio, but it's got to get a whole hell of a lot closer than 11 times away from it. But when you put it into the context, for example, of a 1.1 billion ounce deficit versus supply versus demand over the last 6 years, another 265 million ounce deficit this year, and doesn't even include the military applications that mysteriously have been omitted from the Silver Institute's numbers. When you realize that the M2 money supply is up 14 times since 1980, and silver is selling at a 40% discount to its 1980 high, when you realize that there are 2.9 billion ounces of silver traded on the LBMA every day, which is 3.5 times annual global mine supply. When you realize that these bullion banks that are stupid as a mud wall are short to the tune of 4 to 6 billion ounces that supposedly are available for delivery, those contracts that they sell on the LBMA over the counter market, which isn't an exchange where there's some entity that can come in and save the day. This is a 1-to-1 deal. And all the people who have the other side of that trade think that they can stand for delivery. Doesn't mean they will, but they could. And if they do, that means there's 4 to 6 billion ounces of silver that could actually stand. And the reason that it's not for sure how many there is that it's a much more opaque market. It's a one-to-one market instead of an exchange like the COMEX. And so it's a lot more less transparent, if you will, than the COMEX is. But all of these people could stand for delivery, and yet there's only 300 million ounces available that is not already accounted for at the LBMA. What if everyone stands for delivery? And so when you talk about this scenario where we see continual deficits, we see massive naked shorting, and we see the smart entities in the global south draining the exchanges, where 8.1% of the float, the available 300 million ounces, was delivered in August. Where is it going to? Who's buying it? And so we are entering a period of time where it's accelerating, and the countries around the globe that are buying silver understand that. This is why I made such a big deal about China flying around Latin America buying unrefined silver in the form of bars and and concentrate, which is the byproduct sludge, and the unrefined silver bars, the doré bars that are crudely refined by the miners who then send it to the refiners. Well, China says, I'll just pay you double and take it right off your hand, and I'll ship it to China and refine it myself. Well, they're already the largest or second largest producer of silver in the world. And if I had to bet, they're probably the largest. They just don't tell us how much they mine. And so we are entering a period of time where I think price discovery will ultimately be forced upon the world through some form of a issue where a failed delivery on the LBMA, which could, catalyze a massive spike in the price of silver, or something like COMEX, which is a rules-based exchange where, it's written into the rules that if in the interest of the exchange, we can basically say you can't get delivery, and we're just going to cash settle you. Well, that's a default. So could that happen? Yeah, why not? We're seeing all of these things progress and accelerate, and we're seeing countries accelerate their acquisition of silver. We see Russia being the first nation to openly admit it.
One of the most striking things Schectman points out is the difference between the COMEX and the Shanghai Metals Exchange. On the COMEX, silver is rehypothecated, meaning it's sold multiple times over without the physical metal to back it up. The ratio is as high as 1,700%, meaning for every ounce of silver that actually exists, 17 people think they own it. Compare that to the Shanghai Metals Exchange, where every ounce of silver traded is physically backed by a bar of silver. Each bar is laser inscribed with a serial number that corresponds to the contract. It's transparent, it's real, and it inspires confidence. The COMEX, by contrast, is a house of cards waiting to collapse. When enough people stand for delivery, it's game over. This is where the Ponzi scheme comparison comes in. The COMEX is only a functioning market as long as nobody calls the bluff. But once people start asking for the silver they bought, the whole system falls apart. Just like Bernie Madoff's Ponzi scheme. And while Madoff went to prison, the banks engaging in this rehypothecation scheme will likely just get a slap on the wrist. Schectman is not shy about calling this moment in history a once-in-a-lifetime opportunity to buy silver. The price is artificially suppressed, demand is skyrocketing, and supply is dwindling. The fundamentals are all there. Supply is decreasing, while demand from industries like green energy and electronics is increasing. And on top of that, we have countries like Russia and China hoarding silver, buying it up at unprecedented rates. All of this points to one inevitable conclusion. The price of silver is going to explode. Whether you believe Schectman or think he's talking his own book, the facts speak for themselves. Silver is massively undervalued, and the forces at play are lining up to make it one of the best investments you can make today. At the end of the day, this isn't just about markets or technical analysis. This is about math. It's about economics. The silver to gold mining ratio is 7-to-1, yet the price ratio is closer to 85-to-1. Something's got to give. As Schectman says, mathematics will win. It always does. If you're still not convinced, consider this. The M2 money supply, the total amount of money in circulation, has increased 14 times since 1980. Yet silver is still trading at a 40% discount to its 1980 high. The only reason this discrepancy exists is because of the paper markets. Once they break, and they will break, it's going to be a mad scramble for physical silver. If you've been paying attention, it's clear that the paper markets for silver and gold are a ticking time bomb. The COMEX and LBMA, the two largest markets for trading these metals, have been operating on a system of rehypothecation for years. For every ounce of silver or gold that exists, multiple contracts have been sold. In the case of silver, it's not unusual for the same ounce to be sold to 17 different people. This creates an illusion of liquidity. It makes it seem like there's plenty of silver and gold to go around when, in reality, there isn't. The only reason this system hasn't collapsed yet is that most investors are content to trade their paper contracts without ever taking physical delivery. But what happens when they do? We've already seen the early signs of a delivery crisis. In August 2024, 8.1% of the entire silver float was delivered off the London Bullion Market Association. That's an astronomical figure and one that has Western banks scrambling. These banks have been shorting silver for years, betting that no one would ever stand for delivery. But now countries like Russia, India, and China are doing just that. They're draining the exchanges of their physical silver, leaving the banks with a huge problem. At some point, and it may be sooner than you think, the COMEX or LBMA will have to default on their contracts. They simply won't have the silver to deliver. When that happens, we'll see a non-delivery event or a cash settlement event. Essentially, they'll tell investors, sorry, we don't have the silver, but here's some cash instead. But by then, the price of silver will have skyrocketed, and that cash won't be worth nearly as much. This is the moment Andy Schectman has been warning about. Once the market realizes that there isn't enough physical silver to go around, the price will shoot through the roof. The same goes for gold. We're talking about a massive revaluation of these metals, one that will leave those holding paper contracts in the dust while rewarding those with physical metal. We're witnessing a global shift away from fiat currencies and toward commodity-backed financial systems. The BRICS nations are leading the charge, quietly building up their reserves of silver, gold, and other strategic commodities. In a world where fiat currencies are losing value at an alarming rate, these countries are positioning themselves to dominate the future financial system. But here's the thing, the West is completely unprepared for this shift. The US dollar has been the world's reserve currency for decades, and most Americans believe that will never change. But history tells us otherwise. Every fiat currency in history has eventually collapsed, and the dollar will be no different. When it does, countries with large reserves of gold, silver, and other commodities will emerge as the new financial powerhouses. Russia has already announced that it will start accumulating silver, along with platinum and palladium, as part of its strategic reserves. This is a game changer. No country has ever openly declared silver as a reserve asset before. But Russia understands that in the New World Order, commodities will be king, and they're not the only ones. China has been quietly accumulating gold and silver for years. Officially, their gold reserves are reported to the IMF, but the real story is much more opaque. China uses proxy banks to buy gold and silver directly from refiners in places like South Africa and Switzerland. This gold and silver never gets reported to the IMF, meaning the true extent of China's reserves is unknown. But one thing is clear, China is preparing for a world where fiat currencies are no longer the dominant form of money. They're positioning themselves to lead the next financial system, one that will be based on commodities like gold and silver. China's strategy is brilliant in its simplicity. By accumulating as much silver and gold as possible while the prices are suppressed, they're setting themselves up for a massive windfall when the paper markets collapse. And they're doing it quietly, so as not to spook the market before they've finished building their reserves. One of the most underreported aspects of the silver market is its use in military applications. Silver is essential for the production of high-tech weaponry, including missiles, stealth fighters, and guidance systems. The US military alone consumes millions of ounces of silver each year, yet none of this is reported in official demand statistics. Then there's the green energy revolution. As the world moves toward renewable energy sources, the demand for silver is going to skyrocket. Solar panels, electric vehicles, and other green technologies all rely on silver for their production. But here's the problem. There isn't enough silver to meet this demand. Paper markets for silver and gold are essentially Ponzi schemes. They've been able to function for so long because most investors don't stand for delivery. But that's starting to change. As more countries and institutions demand physical delivery, the cracks in the system are becoming more apparent. Think of it this way. If 17 people all think they own the same ounce of silver, what happens when just one of them demands delivery? The other 16 are left with nothing but a worthless paper contract. This is the reality facing the COMEX and LBMA. Once enough people start asking for their silver, the system will collapse, and the price of silver will go parabolic. So what can you do to protect yourself? The answer is simple. Start accumulating physical silver and gold. Don't wait for the mainstream media to tell you it's time to buy, because by then it will be too late. The smart money is already moving, and you should be too. Whether you're buying physical bullion, investing in mining stocks, or even looking into other commodities like platinum and palladium, now is the time to act. The world is changing, and those who hold tangible assets will be the ones who come out on top. The global financial system is on the verge of a massive shift. The paper markets for silver and gold are collapsing, and countries like China and Russia are positioning themselves to lead the new commodity-backed financial order. The writing is on the wall. Those holding physical silver and gold will be the ones who emerge victorious. Don't wait until it's too late. Start accumulating now, because when the revaluation comes, you'll be glad you did. The opportunity is here. The choice is yours.